How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. This is episode 4 to the Asian Session Library. As we can see, we have another successful Asian Session model with the pair US dollar versus Japanese yen. Now let's take the steps to walk us through as to where we currently are in price action. So first things first, I always say between 12 p.m. to 8 p.m., that's our dead zone. There's no trading permitted here. You're most likely going to be faced with a phase of consolidation, so the market is building in sentiment. Most people that are trading during this time period don't realize that there's nothing backing or supporting their trades. Certain entities that are in the marketplace aren't going to be around here trading. So that's why the market most likely is going to squeeze and not move with large candles. You're most likely going to be presented with low volume. Don't trade here. Going into the Asian session, there's going to be an entity in the marketplace, and there are going to be much more other people trading during this time period. What I'm doing here is marking off the fractal swing highs and swing lows just prior going into 8 p.m. That's going to be my basis of where buy side and sell side liquidity is residing before going into the Asian session. So if you use the replay function tool, let me bring it right back just before 8 p.m. starts. We're going to mark off all our obvious swing highs and swing lows during the dead zone. So we can see here, we have one here, and I believe this one is lower and this one's higher. Yes, these are relatively equal, so I'm just going to go with this one. So that's a swing high here. Now what's above that swing high? It's going to be buy side liquidity sitting right up here. Anything below an unbroken swing low is going to be sell side liquidity. So we have the highest high and lowest low marked off so far. But then there's also other swing lows and swing highs that are not broken as well. So we have one here. We'll mark that one off. And we have one here. And then for the swing lows, we have one other one here as well. So the same thing applies. There's just buy side above this high and this high. And then the sell side below this low. Now going into this session, what I'm thinking to myself is, where is price most likely going to draw to? Is it going to draw up or down? That is normally going to be really advanced for most people. If you're looking for directional bias, you want something following your bias, then you'll suspect that price is going to go up then sell. I was figuring UJ was going to continue to sell. If you've been watching my daily updates, I'm saying UJ is going to most likely come down into that daily busy. So those that know that I'm looking for UJ to go lower. So if that is the case, I could go into the Asian session model thinking the same idea as well. We break a high, we go short. But if that is not the case, and instead UJ breaks a low, I'm just going to look for a buy scenario. So it doesn't matter. I don't have to follow the daily bias. But if I want to, and I'm speculating UJ to go lower, I'd rather it go up than down. If I'm speculating UJ to go higher, I would rather it go down than up. The model doesn't necessarily use bias, but there are times where the model does follow the higher time frame trend. Now moving forward, I'm going to see which side of liquidity is going to be taken. Is it the buy side or the sell side? So we'll play it forward slowly. We can see instantly 8 p.m. arrives and it runs up and it takes out this swing high here. Now we can mark off the 8 p.m. opening price here. Now we know anything above this opening price is going to be a premium. Anything below it's going to be a discount. So high odd sell scenarios are going to form above the 8 p.m. line. And high odd buy scenarios are going to unfold below the 8 p.m. line because it's cheaper to buy down here and it's greater to sell at a higher price if you're looking for a sell setup. Now at this point, I go in the lower time frame to find a fair value gap that's going to form after breaking that swing high. So we can see that first red line is that first 15-minute swing high that we reach that's unbroken, that has buy side liquidity above it. Now we're just waiting for a fair value gap to form, a very obvious one to form. There we go, fair value gap. So this fair value gap, there's no market shift here. You can see it doesn't break a swing low, but it is a fair value gap in theory. And more specifically, it is a SIBI. It's a sell side imbalance, buy side inefficiency. It's selling very fast without covering the buy side. That's why it's also called a SIBI. At this point, that's where I'm going to look to go short. Now, my parameters for the setup is I'm going short on the discounted side, the bottom side, not the premium side of the fair value gap. As soon as price touches the discounted side, going short there. So this would be the entry point. And we'll mark this off in green so we can see it. This would be the entry. Then I would frame my stop loss. It's going to be 15 pips generally. Sometimes it's 20, but 15 pips from the entry. So stop loss would be here. So we're going with a 15 pip SL. And then we can go with a 15 pip TP or a 20 pip TP. So you could risk $1 one for one, 15 pips to gain 15 pips, or you could aim for a little more. So let's say we're going for 20. And generally that's what I'm looking for. Minimally, ideally I want 20. 15, 10 pips, you can take that and sleep at night. But I'm normally aiming for 20 pips. And we're going to make this another type of green. Make it this green. So that's the TP. And that's 20 pips. Now at that point, I have all my parameters set, and that's where I'm looking to go short here, to aim for this. If you play price forward to see what happens, we tag it. Price shows signs of breaking down, making lower swing highs and lower swing lows, so it's a bearish trend. And we can see how price gets back down to that fractal 15-minute swing low here. So that's that 15-minute swing low. So it takes out this one, then it takes out that one. And then you have the other one that's down there below it here. So we have that one as well. But with that idea, we quickly run 15 pips. And if I speed it up a bit for the video's sake, we easily run 20 pips. And if I play it forward to where we are currently in price action, this is where we are. So based off of the model, you would have been well into some profit. And if you had to see where max profit, you would have been up and we're around, let's say 50 pips right now currently, if you would have took that setup. And this is all occurring right now. So I'm going to post this in a few minutes, but you'll see that this setup was definitely feasible. If you walk through the steps, look at all the episodes that I posted, episode 1, 2, and 3, and this one, they're all the same thing. No bias. Just going in, waiting for one side to be broken, find the first fair value gap, go short or go long. Hopefully this was insightful. Peace.